Hi. Welcome to this panel. We're gonna talk about how institutionals are moving in this bridging, let's say, journey between TradFi and DeFi. Let me first introduce to you our speakers, and please, guys, give a quick introduction about you, just a couple of minutes, what you're doing, who you are.
Yeah, so Joseph, managing partner of Axis Group. We're basically a legal, regulatory, and corporate advisory firm on emerging technologies predominantly. Work with anything from like DeFi protocols, centralized exchanges, crypto asset service providers, token issuers, whatever it may be. Work with the likes of Sky, Rain, EtherFi, etc. And basically, like the main thing that we do at the moment is help companies within crypto at the intersection of crypto and payments enter the European market.
Hello, everyone. My name's Kean. I've been in crypto, I think, just over 10 years. I started my career in Deloitte doing FS, capital markets consulting on crypto. I was then in Consensus for around 5.5 years, mainly working on MetaMask institutional and Fura staking and a couple of other products. After that, I was in a small startup for a while doing portfolio and risk management for crypto funds. And now currently I'm head of institutional relations and I lead Lido Institutional. So effectively my mandate is to help grow institutional adoption of STETH. So by that I mean different crypto funds, asset managers, ETP, ETF issuers, and DATs.
My name is Andri. I work for Ledger, that's the world's leading wallet technology provider. I head up the institutional business in Europe, and before that I was working for Switzerland's second largest bank, where I built a digital asset custody platform.
Hi everyone, my name is Chiara Rikabi. I am Director, Head of Italy and Canton Ticino at 21 Shares, at Zurich-based issuers of ETPs on crypto. I focus on the business development for 21 Shares, which is the largest platform of exchange-traded products on crypto. Our platform offers more than 60 products listed on the major European stock exchange, now also on Borsa Italiana, as well as many other international markets like Nasdaq, Dubai, and Australia. And therefore, our aim is to make the access to digital asset simple and secure through traditional bank accounts or brokerage platform. I usually work very closely with institutional clients to support the integration of Bitcoin inside their traditional investment portfolio, increasing risk-adjusted return and diversification. And last but not least, many of our clients have also expanded into altcoin diversified strategy, increasing returns while managing overall portfolio volatility.
Thank you, guys. So first of all, I would love to say thank you for how they have managed this amazing institutional panel, because we have custody, we have compliance, we have product with ETPs from 21 Shares, and we have, of course, the mechanism at the base, which is staking given by Lido. I will start asking a question directly to you, Joseph. So we have a very interesting period right now for a compliance point of view. We had the Congress talking about the Clarity Act last week, which was pretty positive at the end. And so here in Europe, with our MiCA, which deadline is on the 1st of July this year. And I know that your company is dealing more than 50% with the MiCA passing through Malta. Do you believe is Europe going in the right direction, or do we risk to falling behind everybody else?
So I would say overall, we are definitely on a decent trajectory, I would say, on a balance of probability. The main issues in Europe at the moment are more so, we went very heavy on regulating the centralized crypto providers in the industry, but we have no clarity whatsoever, no pun intended, because of the Clarity Act, of course, on DeFi protocols, on-chain implementations, hybrid implementations, whatever it may be. So I think when it comes to token issuers in particular, we did a very, very good job, I think better than the US permutation at this point in time, and we have a very, very good disclosure-based regime when it comes to token issuers, ICOs, whatever it may be, token-related. However, when it comes to how DeFi can integrate with the regulatory regime, I still think we're lacking behind heavily, especially in relation to the US, who already have very good technical-oriented carve-outs, in particular for DeFi, whereas we just have a recital that is so ambiguous and so subject to interpretation, which is fully decentralized without any intermediary in place, which, if I ask, I think everyone in this room what that means will have different interpretations across the board. So overall, good direction, but I think if we don't continue, especially at the ETHMA level, getting more guidance on certain interpretative provisions that are being interpreted in many, many different ways, we will definitely risk lacking behind, in my opinion.
Yeah, sure. Even because, anyways, US are trying to make it easier for us to using it. Do you believe Europe is doing the same things, or just regulate it and make it, let's say, this compliance theater even more difficult for businesses to understand? Everybody, yeah? Yes.
Yeah, I think it's definitely difficult. So we're currently handling about 20 plus authorizations in Europe. And again, we work with like Rain, EtherFi, startups, whatever it may be. I think it's definitely difficult. And whenever we tell clients kind of the compliance requirements under MiCA, some of them almost have a panic attack, to be very honest with you. It's also not very startup friendly because the costs that you will incur to get your authorization and like the bare minimum, so your compliance officer, MLRO, and certain key functions, you need about 200K initially to get up and running. And that excludes all the technical aspects that you need then, you know, to get, if you're running a centralized exchange, to get order book technology and all that stuff. So I think the main risk in the EU is that it is always a bit compliance theater, let's face it. I mean, we have a lot of politicians and incentives dictate outcomes. They're at the EU, so they need to regulate. But I think we need to be a bit more startup friendly, especially for on the crypto side, which is a very startup oriented industry, I think.
Yeah, sure. Even because we have not, for so far, nothing to dealing with stablecoins in euro. Do you want to add anything, guys, or just keep going?
No, maybe a general point from a staking perspective, I actually think Europe is quite good. Like staking has been around in European ETPs for a number of years, whereas from an American perspective, I think ETHB only went live, what, 4 or 5 months ago. So I would probably give some credit to the regulators in that point.
Definitely. Andri, what do you think is the biggest roadblock for this implementation? So we talk about compliance. So which are the rules actually and the regulators? How banks can actually do it from a commercial point of view?
I think the biggest roadblock is that banks don't know where to start, and if they start, they usually are just overwhelmed by all the complexity. I think there's been a big shift in the past 12 months from should we do digital assets to how can we do it. So right now, when I talk to a bank, any bank in Europe, the question is always how, and the question is what do we start with? I think a good signal is Kivalis, not like they've already done a lot, but at least they brought in a lot of movement. So all the banks have reached a point where they know they have to get started, and they are getting started. So I personally think the roadblocks have been the biggest ones eliminated, and now it's just about execution. And as Europeans, we're usually not the fastest one. We don't like to take too much risks. So it's going to take 12 to 24 months, but all the banks are coming, yeah.
Do you believe there is actually all the fundamentals for this real implementation, or they're just running because, you know, there is this hype around cryptos and so they want to integrate the asset as well?
It heavily depends on the region we're talking about. So I'm Swiss native, and like crypto has been implemented in Swiss banks since 2017. We've had clarity around staking and ICOs for almost 10 years now. But then if you go up to the Nordics, the banks are still very skeptic of crypto, so they go more towards stablecoins. So I would say it heavily depends on where you actually go, but everybody's doing something or everything.
Yeah. And but do we actually want this merge between the two things, like between the two words? Is there something really positive, or we just pretend that it is?
Personally, I'm a big supporter of it. So first of all, I think self-custody is very important, and the possibility of interacting directly with DeFi without any third party, that's very important from a freedom perspective. But I also think for an adoption, or to have mass adoption, we need this convergence. And I'll give you an easy example why I think it's important that it happens. Crypto brings transparency, it brings composability, and it brings a technological standard for digital value. But what it lacks is it lacks stability, it lacks risk management, and it lacks compliance. And I think that's what traditional finance brings in. And that's why I think we combine the best of both worlds, and then it's going to be an exciting future.
Yeah, definitely. Do you want to add anything, Joseph? I saw you before.
Oh no, to be fair, I mean, I'm like in agreement. I think also like a lot of banks at the moment know the why of why they want to get into crypto. Like obviously it's increasing in adoption and they also have a lot of client demand. Some of them obviously don't know the how. So we have this like thing called Project Get On Chain, where we basically speak to banks and try to red pill them on crypto, on the offerings they can provide, because actually MiCA also caters for the fact that banks can get a fast track to basically offering crypto asset services. But most of them, even when they tell us like, we want to offer cards, and I'm like, okay, but how are you going to structure it? They have no idea. They know why they want to get into it. But then when it comes to the technical nuances on the back end, a lot of them need a lot of help as well.
And the market is still super young because we are barely 20 years in. So even the expertise, like people knowing what they're doing with 20 years in background in banking, are very few of them. So it's difficult. Chiara, you are the director of Italy, so you are on the stage, the only Italian voice that can a bit geolocalizing our discourse on the Italian market. What do you think about the Italian banking system with cryptos?
Very nice, very interesting question. Yes, I can speak from an institutional investor point of view. And I would like to say that at the moment, many institutional investors, such as pension funds, mutual funds, or insurance companies, still have a limited participation in the crypto market, because this kind of institutional investors usually have a conservative strategy and usually have long-term horizons. And their limited participation in the market is one of the key reasons because the price of Bitcoin, because Bitcoin is still volatile. The market demand, in fact, is still driven by retail investor or speculative traders, which usually use some strategies that affect the price swing. Anyway, the situation is going to change because we can see that thanks to the introduction of some instruments, regulated instruments like the ETPs on crypto, the institutional investors are becoming more familiar with this kind of market, and also the institutional capital is going to enter the industrial space. And we can also analyze, in my opinion, the crypto market at the moment based on two key factors: the expertise, the knowledge on crypto, and the assets. The assets are distributed across the market according to the investor sophistications, following a curve bell structure. If the expertise gradually increases from retail to sophisticated investor, we can see that the assets, the concentration of the assets tend to peak at the mid-high expertise segment rather than at the two extremes. Therefore, we can we can see the crypto market in relation to the knowledge on crypto. First of all, we have the retail investor, then we have the financial investor, we have the private banking sector, then there is the proprietary trading desk and the hedge funds. But what is still missing is the center of the curve. It means mutual fund, insurance companies, and pension funds. And it's really a pity, it's a shame, because we have to remember that these players still manage the great majority of saving in Italy. and they are not in the crypto market space at the moment. So the market is concentrated, it's still a niche market concentrated at two opposite ends of this curve bell. On the left side, there are the retailers, who are not sophisticated, not so professional, and on the other side, we have something different, which is a few highly sophisticated investors who are very specialized on crypto, and they represent the next generation of the Italian investor. Sorry, maybe I was too long, but it's a very complicated conversation.
Even because 21 Share is already a bit bridging between the two worlds, giving ETPs to the Italian market by everybody.
In fact, about these conversations, staking, custody, self-custody, they are all very interesting, but in my opinion, the Italian investors are not prepared at the moment. They are not ready. They are looking at this world, but they are not ready.
We are not very famous to be investors. We are more famous to be savers. This is actually true, and my next question will be for Kean, because for who doesn't know, Lido is the world's largest staking protocol, managing over $40 billion, right?
I think right now with the price, it's probably around 20 billion.
20?
I think 10 billion of ETH is used as collateral on DeFi today. So 40 is a good number, we'll take that.
All right. And if the compliance part, so the MiCA will pass through and everything will actually be approved, this open up to the traditional finance world some products that right now are just for crypto world, okay? How will the staking protocols will evolve in this case if all the issuer, for example, Van Eyck, that already has proposed something, BlackRock can actually enter it and be a player, an active player in the market? What's the Lido proposition?
Yeah, so like you mentioned, like Van Eyck has filed for the S1, that's currently in progress in the US, so we speak to the Van Eyck guys quite regularly on that topic. The one main product that's live in Europe right now is the WisdomTree Staked ETH, ETP. That product launched with a $50 million seed. It's already grown, I think, 25% in the past 6 months. So, like, there's clearly significant demand for a staking product like that. When we typically speak to investors, and we had a nice lunch yesterday with 40 Italian private banks and family offices, like, one of the big things they're looking at is what the staking reward rate of the product is. So, for example, most of the European ETPs right now typically operate on a 40 to maybe 50% staking ratio. And the main reason for that is they have to keep a significant proportion liquid for redemptions, because the execute for staking can fluctuate. These issuers typically operate on a T+1 or a T+2 redemption requirement. So with native staking, that doesn't exactly meet that requirement. But from a Lido perspective, and what WisdomTree has done successfully with Lido, is they have a liquid staking product. And that's the first product globally that it's 100% staked. And I think there's benefits in that. Obviously, from a Lido perspective, we're driving decentralization, we're bringing on board new institutional users, but it's also helping decentralization. So for context, like Lido is a middleware. Nothing is actually staked with it. On the back end, there's 900 different node operators. So when I speak to a lot of, I suppose, heavy crypto degen types, for lack of a better term, they would typically kind of criticize Lido for being centralized, where it's actually the exact opposite. There's a huge amount of work happening to make sure Ethereum remains decentralized. And we're doing, and my team, I should say, are doing a huge amount of work of bringing on institutions to help them support decentralization. Where I would actually become more concerned is if you have a custodian / node operator where it's just one entity. Suddenly centralization can be quite a big concern. So the likes of the Coinbases of the world, they're just one single node operator, the one custodian. They're not exactly driving decentralization. So when I speak to institutions, I may not use the word decentralization. I tend to use diversification, because that's a word.
Like it more.
Exactly.
Yeah,
they're comfortable with that term.
Which is the same things at the end.
Yeah, exactly. And it's helping driving decentralization, and then from their perspective, it reduces risk. So there's no single point of failure in that regard.
Okay, you don't believe that there's going to be any chance that the staking layer will be, let's say, integrated into the ETPs layer in the future?
Well, like ETP is just a wrapper, so it's a very easy way for these institutions to get exposure to staking. So I think, again, one of the big things for these institutions is like what proportion of the product is staked. And the other thing I would say is like ETPs are just convenient. Like you go and you use a wisdom tree product like the list product, they manage the custodian, they manage the index provider, they manage the insurance, and they charge 50 pips.
And they already know how to do it, which was the problem that we said before. They don't know how to do it now.
Yeah, exactly.
So true. And please, guys, feel free to interrupt each other and say whatever. Coming back to Chiara for the ATP sector. Which is a product that you will see in the European market, not just Italian market, because it's too small so far for what we said before. Which kind of investor we will wait for this next ATPs product, or which kind of product we're waiting for the next months?
So maybe not in the next month, but in my opinion, in the next 12 or 24 months, we will see a big shift. We will see that the institutional investor will look for a transition because, in my opinion, the great majority of the traditional financial asset will be tokenized. So we will we will have a transition from closed financial instruments to digital, fractionalized and 24-hour-on-7 tradable assets. And we can already see some signals from the market now. For example, we can see some big platforms like Robinhood or Kraken, which are experimenting with tokenized bonds, or, for example, also major institutions in the institutional investor environment like JP Morgan, Morgan Stanley, Deutsche Bank. They are working on the tokenization of bonds. And in addition, there are also some initiatives linked to the market index. They are working with the Standard & Poor's 500 on infrastructure like Hyperliquid. And in my opinion, it's completely normal because we live in a digital, in a always on world, the world, digital world where we can buy, we can purchase, we can travel 24-hour-on-7. And this transaction is the future. So it will take time, so maybe not 12 months, but in the next 4 or 5 years, probably the product will be the tokenization.
Okay, so we keep going on the real-world asset tokenization and following, for example, the Ondo strategy, which tokenized the US market. And do you believe that this is going to be the next product for the next, let's say, cycle in 24 months?
Yes, probably.
Okay. Andri?
Well, I think we can differentiate between 3 things. One thing is cryptos as an investment class, and I think there we need to make the product smarter, like the times where you buy Bitcoin, you wait for the price to pump, and then you sell again. I feel like we've been a bit past that, so now we talk about how can you actually use your assets to get yield, especially when we talk to institutional investors. They're very used to have their assets work for them, so talking about lending, borrowing, staking, and so on. So I think that's one side. I think buy and hold will not be enough, especially not in the institutional sector. Then the second thing, and that's what's driving adoption right now, I would say, is all the treasury use cases, because their speed matters. So we heard it like JP Morgan, they run their whole tokenized deposits book around the world. So their corporates actually send around tokenized deposits. They've been doing that for years already. They just didn't say they were doing it until it became cool. So that's where we see a lot of traction. Stablecoins go into the same thing because their speed matters so much. On the whole tokenization of real-world assets like securities and so on, I'm a bit bearish in the next 1 or 2 years, because if you know how finance really works, like if you've been to a big bank and you see the whole plummeting behind how these markets work, it's going to take a lot more than just 1 year to tokenize that. And the other question then is, talk to a trader, like, do you even want instant settlement for your securities? because that means they need to pre-fund it. Right now, if you trade, you usually don't have the assets and you need to get them before you have to do the settlement T+1 or T+2. So it's actually also a big mindset shift that comes with new friction and new risks and costs associated. So I think the third pillar, like tokenized real-world assets, will not really become mainstream in the next 12 to 24 months.
Yeah, we actually said something with you, Joseph, before that from a European point of view, we are ready for, the, let's say, big enterprise side, but we are not ready for small things, for startups, for smaller investors.
Yeah, I would say even if you look at the amount of companies that have gotten authorizations in Europe, most of them are from the US anyways. So we lack quite a bit from a percentage point of view, European native crypto asset service providers in particular. Even our client base is predominantly from the US or Asia in particular. But on this particular point, I think DeFi protocols, the large ones, the Lidos, the Skies, etc., at some point they kind of realized, oh, okay, institutions will not just spin up a wallet and directly engage on chain. So now a lot of them, rightly so, like the Wisdom 3 ETP, you need to create familiar products for them that they're comfortable with from a compliance point of view, risk point of view, liquidity point of view, etc., with crypto as the plumbing on the back end. And I think there is this trend already emerging. We see it initially because we started receiving, the past quarter, most of our inquiries were anything from tokenization, securitization, structured notes, call options. And these are kind of the products that we need to create for these institutions to actually enter into crypto, because they're not going to spin up a multi-sig safe and, deposit into a liquidity pool. They want something they're familiar with, and they have no issue engaging with crypto indirectly through a TradFi product, I think.
Do you think that's just a stepping stone until they have the wallets and do it themselves, or do you think that's the end game?
I think it is a stepping stone. I think they want to dip their toes through something which is more risk mitigated. But I think when they realize that potentially their yields can be higher if they directly engage on chain, I think when they do get the technical expertise to actually have proper guardrails in place for the stuff, I think that is where then we'll actually see them directly engage on chain, which some of them already do, by the way. A lot of them do.
Kean?
Yeah, it's an interesting one. I always view it from a sales perspective. Like you mentioned before, when I go into a room of crypto native people, everyone knows what Lido is. When I mention MetaMask, everyone knows. If I go into a room of traditional finance folk, I spend a huge amount of my time selling Lido and explaining what it is, and that ultimately makes the sales cycle a lot longer. It's very difficult to go from education to opening your wallet. They have to be comfortable with it. So for example, with the Wisdom Tree product, I think we answered something like 450 questions for Wisdom Tree over the course of a year. We had to get them comfortable with the idea of what is a DAO? At the basic of levels that, talking about staking, how do you sign an agreement, all these different elements which from crypto native people, they understand that. Whereas if I have to explain to them, oh, there's 5 people on a multi-sig, that again leads to conversations and topics and then risk departments. That's quite difficult. Or we're speaking to a big asset manager in the States and we tell them there's 900 node operators. So then their risk team will come back and say, we want a KYC 900 people. That's not feasible. Yeah. So again, there's an education journey that kind of goes with that, but it just takes time.
Yeah, which is something interesting actually, because I want to say something one point is going to someone who's into the financial words like banking or any kind of traditional finance, and explain to them what is about the cryptocurrency, which is the word in general, which is something really difficult because we are taking out 3 out of 5 pillars of the normal finance. Let's say it's decentralized. Already you have destroyed half of the traditional finance concept. But as users, we have put so much effort in trying to get people know what the crypto market is about and teaching everybody. But if we think about it, not even the traditional finance is doing this. People are using money every day through a banking system. I'm pretty sure 20%, I'm stay large, 20% of the people know actually what's going on their banking account. So yeah, we're going for 20 years almost trying to teach people about this, but they keep going using money, not even knowing what money is about. We do need something maybe at the foundation of this for teaching to people What do you think?
To be honest, I've been in the space for quite a few years as well, and sometimes I'm confused myself. Like, what is crypto even? Like, we throw everything into that term, and if we think about all the cycles we've had in the past, let's say 5 years, it's wild, like what we did with NFTs and what we did in the DeFi sector and with the whole meme coins, and then even comparing Bitcoin and ETH, like it starts there. So it's very difficult to even explain what is crypto. And that's, I think, why we've also in the institutional sector, we've moved on and we now call it digital assets, because that's actually just everything. So I often talk to people, they don't know what is a token versus a coin. And like, so I think even us as an industry, we need to get better in how we use the language. And I think it's also due to that no regulatory clarity, that we can just use the words we want, which is very different in traditional finance. And I think it would help if we have wording and we're all talking about the same things.
If I can add something about that, I totally agree with you. Education is very important. It's the basic in this environment. And from an institutional investor point of view, many times when we speak with institutional investor, the main objection is we don't want to do crypto. Sometimes it's not from traditional banks, we can't do it, but they don't want to do it. And it's more a cultural problem than a technological or regulatory problem, because they still see crypto as a taboo topic that they don't want to touch. And this happens despite the clear MiCA regulation, despite now in Luxembourg, crypto ETPs can represent up to 10% of the portfolio, despite the listing on Borsa Italiana. And despite many things, many aspects which are in favor of crypto, it's a cultural problem, and it's where issuers like 21 Shares or many others have to work on. We have to educate and we have to help this industry to make a mindset shift to understand that crypto is now established part of the traditional financial markets.
Yeah, I think also like another thing is crypto projects sometimes overcomplicate their products to a degree where no institution will ever be comfortable integrating with them. Like I think 2 years ago, Eigenlayer had come out with like fractionalized, collateralized, on-chain, segregated, operated by a DAO. I'm like, Jesus Christ. Like no one will ever use it.
For sure, it's not a very easy topics, and only people who can get easily this topic are normally engineers or people with a math background. Yes. For the other, it's still a complicated topic, and therefore we have to help the environment to think crypto like a technology.
Yeah, but every time that there is a new technology, we do have this kind of problem, particularly this time. But we, as a human being, we used to have this every time. Let's talk about website in 2000. I wasn't there, but they told me that was pretty tough as well. So, Joseph, since you're dealing with MiCA, like you actually do this for different companies, do you believe that Europe can actually get a single like MiCA for everyone, or do we will need in the future, so let's say from 5 years to here, state like national regulation, or they keep going doing the like just one all in one?
I mean, the kind of promise of MiCA was to harmonize the regulatory framework for crypto assets across the EU. On paper, that is what it does. Off paper, what actually happened is a lot of regulators across the European Union, their implementation of their supervisory practices in relation to MiCA are completely fragmented. If you apply for an authorization in Malta versus Spain versus Italy versus Netherlands, you're going to get 4 or 5 different approaches to the authorization, which is a big problem. And like a lot of people think of regulators as like these inanimate robots that, you know, you put code in them and they operate the same. Like they are people at the end of the day. So like the Spanish regulator in particular, like when MiCA came into force, they panicked because when it comes to like the more complex product types, like we work on authorizations, you know, RAIN is like on-chain centric, smart contract based, like crypto collateralized credit card. You go apply with something like that to Spain, they will basically shove you out the door. You go apply for like centralized exchange, it's fine. So although we have harmonization like on paper, and that's what it's supposed to do because it's an EU regulation, the implementation from a regulator point of view is completely fragmented at this point in time. ESMA doesn't help because it needs to give more guidance, and it doesn't, to be quite honest. Yeah. I hope there's no one from ESMA in the room. Hopefully. But I think this will improve over time. Like, I'm from Malta, so the benefit that we had is that I think, like Switzerland in particular, we had one of the first fully-fledged regulatory frameworks for crypto assets in the world. And our VFA regime, as we had termed it, was actually even more complex than MiCA. So when it came to us implementing MiCA, we actually had to take it a few notches down. But what that resulted is we had 7 years of a regulator having experience dealing with exchanges, crypto payment providers, etc. Other regulators in Europe, this was their first time dealing with these crypto projects. So when it comes to like something that has an on-chain element, they deem it too complicated and the process is going to be much longer. So we have harmonization on paper, but I think regulators need to educate themselves a lot more for us to have optimal harmonization across the board.
Yeah, we don't even have the MiCA yet, like the final
I mean,
thing.
yeah, technically, like a consultation
drafting.
paper just came out, I think, on the 20th of May. And they actually like they're soliciting opinions on like staking, DeFi, whether there need to be any changes to MiCA. So it's still not done, actually. So like the basic primitives of crypto asset services, which most of them are influenced by MiFID, as always, they're there. But I think we'll have some changes. My frustration is MiCA has been enforced for like a year and a half, and they're already starting to discuss MiCA 2.0. Like, we haven't even seen whether this works. A lot of the applicants that applied haven't even gotten their authorization yet, but you already want to change it. So that has created some instability, I think, because big institutions want foreseeability. They want to know that if they're going to invest for 5 to 10 years, nothing's going to change, ideally too much for 5 to 10 years. And I don't think we're helping ourselves in this regard, basically.
Okay, thank you so much. Yeah, that's my only question. Like, we are doing it for us, or just because we are risky or we are afraid to fall behind, in particular the states? So that was the main question. Okay, guys, so thank you so much for this panel. I do believe that we have take out a few interesting points for the future. And do you have any question or something else that you want to add? Or someone on the stage has any question they want to ask to our speakers, please just raise their hands. There is a question.
Hey guys, thanks for the panel. I've got a question for Kean at Lido. So, like, if we're looking at the GETH, like we're clearly seeing that that's kind of the main execution client for Ethereum staking. I mean, here we're talking about close to 90 to 100% on Binance, Coinbase, and at Lido is close to 80%, I think, or at least that was until 1.5 years ago. So, do you see that currently has a single point of risk? Are institutional investors aware of that? Yeah, like that's the question. Second question I have for Andri is, compared to Trezor, you're not open source. Why is that? Thank you.
So yeah, I can give you quite a high-level answer, but refer you to more technical and more intelligent people than myself. But I would say, like, does it come up as a topic of conversation? Yes. Does the thread get pulled on quite significantly? No, would be the answer. I can say with absolute confidence that, like, there's no one doing more in the ecosystem than Lido to make Ethereum decentralized and secure. And we do have kind of dedicating working groups and people quite passionate about this topic to make improvements and changes. So yeah, at a very high level, that's probably the best answer I can give you for right now.
Andri?
Well, I work on the institutional side, so it's a fundamentally different product. Yeah, we can pick it up afterwards, but I think I'd rather have a wallet that is not open source, but it cannot be hacked. If you don't know what I'm talking about, watch the YouTube videos of the Dojo. Yeah.
Brilliant. I guess it wraps it up. Thank you so much to Chiara, Andri,
Thank you.
Kean, Joseph, and Martina.